Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Ethereum, and we're going to be providing a general market outlook. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. In this video, I would like to just candidly talk about ETH, its performance on its USD pair, its performance on its Bitcoin pair. Where are we within a theoretical market cycle, if you believe in those? Where are we within the monetary, sort of the business cycle from a monetary policy perspective? Where are we with all this stuff? And so there's certainly more than one way that you could look at ETH, and I would like to just present the different views so that you can better understand what is the risk to the upside, what is the risk to the downside, and hopefully it helps you navigate the Cryptoverse just a little bit better. So right now, ETH is coming in at $2,800, just below $2,800. The high it has gone so far in February is around $2,868. So it's gotten close to 3,000, but it hasn't quite made it there just yet. One of the things that we can do, and we often do this with Bitcoin, is we measure the performance of ETH from a certain milestone, and when we compare that to prior cycles, right? And that can often give us some insight into what is theoretically going on. For instance, if you were to do it for Bitcoin and you were to just look at all prior market cycles, maybe throw out the first couple because they were so long ago and just look at the last, the ones that we're currently, the one we're currently in and compare it to the last two, you can see why there's some justification to compare performance from a major milestone, right? This is looking at the ROI of Bitcoin from the bear market year lows. So, right, you're comparing it from 2022 to today, comparing it from late 2018 through that cycle, and comparing it from 2014 through that cycle, right? So you can certainly see the case or see the reason why it would make sense to talk about something as measured from a very specific milestone. And so if you do the same thing with ETH and you look at say, the theoretical 3 cycles that we've had so far, this is what it looks like, right? So cycle 1 was the blue line, which was way up here. And then cycle 2 is this line right here that sort of extends all the way out. And then the current cycle, if we just get rid of the first one, the current cycle is currently below the prior cycle in terms of ROI from that prior low. But that's ultimately expected. You would expect some form of diminishing returns from one cycle to another. So this, of course, is one way to look at the market from a cyclical point of view that only looks at these major milestones from historical cycles. This is one valid way to look at ETH. Another valid way to look at ETH is to compare it from, say, the peak. And if you do that, and the reason for doing that is if you do it for, say, Bitcoin, and maybe let's just get rid of the first one. If you do it for Bitcoin, you can see like why looking at the ROI from the peak can make some sense. There does seem to be some repetition from one cycle to another. Of course, right now we are well above where we were from the prior 2 cycles, which would lead me to believe eventually we will have a cool-off period, just like in the last cycle we got well ahead of the cycle before that, but eventually we came back down below it. I suspect like something like that will happen again. Of course, it's impossible to know exactly what time frame that is on. But I mean, you can see why looking at it as measured from the peak could be useful. And so we can do the same thing for ETH. And that's what it looks like, right? We have, as measured from the peak, we came all the way down and we've been slowly trending up ever since the summer of 2022. And we are, of course, well above where we were at the same time in the prior cycle as measured from the peak. Now, one of the reasons for that is because the lowest price that Ethereum went so far was back in June of 2022, not in December, which is when, or November, which is when we saw Bitcoin drop again. And that's one of the reasons why this is sort of further out in time from that milestone than Bitcoin is because Bitcoin eventually put in a new low in late 2022, whereas ETH did not. Now, while that may be the case, and I know a lot of people look to that to sort of paint ETH to be stronger than Bitcoin, I would like to humbly reiterate, I do not think that is a fair comparison. The reason, and a couple of reasons, one of the reasons is because ETH, when it fell, the first drop was already an 82% drop, right? Bitcoin's first drop, right? If you look at Bitcoin's first drop here from this high to the summer 2022 low, it was only 74%. Even though it did put in a lower low in November, it was still less than what ETH put in its June low, 82%, right? So 77% compared to 82%. And this was one of the main reasons why going into the merge, everyone was so bullish on ETH, right? They were looking at it and saying, well, Bitcoin put in a new low, but Ethereum did not. Therefore, the argument, of course, was that Ethereum was much stronger than Bitcoin. And that's why so many people refuse to believe the idea that the dominance of Bitcoin could ever go back up to levels that it's at right now, right? It was not seen as a likely outcome. Remember, the merge occurred right here, which is what marked the bottom on Bitcoin dominance when you include stablecoins. So using the idea that Bitcoin put in a new low in November, whereas Ethereum did not, as some sort of a justification that Ethereum was stronger, in my mind, held absolutely no weight at all. And that was why going into the merge, I said very, very convincing in my mind that ETH Bitcoin would likely underperform, right? The Ethereum Bitcoin valuation would bleed. Now, throughout that entire time, right, and what we saw over the last year or so, and I can't tell you how many times I've made videos on ETH where we talked about like the ETH Bitcoin valuation, and inevitably whenever I talk about it at some point in the following weeks, right, there's been some form of a pump, and it always led people sort of back in, right, like thinking that, all right, enough's enough, it's going to go, people thinking it was going to then go flip Bitcoin. And the flipping narrative was extremely strong up here, right? I mean, everyone was talking about it. And I said back then, I said that this to me looks like a distribution phase, right? This is a secondary distribution phase, just like Bitcoin had in 2021, right? You had your 4 peaks, you put in a low, and then you had sort of your double peak, your sort of your 1-2 top, just like Bitcoin did, like 63K, then 69K in its secondary top, right? Remember that? You get these, we had those 4 peaks. 1, 2, 3, 4, and then a low, and then sort of a secondary top. And then the argument was that, well, what if Ethereum does the same thing on its Bitcoin pair, where it goes all the way back down, to these lows, right? And that was what we talked about, right? That was what we talked about, and then eventually breaks those lows, just like Bitcoin USD did. Now, back at the merge, that view was not popular, right? And there's a lot of people that liked to mock those, that enjoyed mocking those views, and when it turned out that ETH Bitcoin did keep on coming down, they sort of turned away from that and started sort of picking out other things to talk about. But if you go back and look at the ETH Bitcoin pair from the merge, it has basically been down, right? Look at monthly candles of ETH Bitcoin, the ETH Bitcoin valuation, and look at Heikin-Ashi candles. We've seen red candles ever since 2023 started, right? And you can see this high on this candle was in September 2022, right around the merge. So one of the things that I've reiterated a lot over the last year is that ETH/USD sort of is just being pulled by Bitcoin, right? Like, so if Bitcoin goes up, it can drag ETH with it, but in my mind, that's the only reason ETH is going up, right? Now listen, I've faced a lot of criticism for the views on ETH Bitcoin going down. And I mean, it's not, I think some of the criticism comes from a good place, but essentially it revolves around the idea of you're not considering the tokenomics, you're not considering that ETH is deflationary, you're not considering this, you're not considering that, right? And despite all of that, right, despite all of those people that said, hey, you're not considering this or that, and this is why it'll outperform Bitcoin, this is what has happened. And every step of the way, right, people just keep saying, well, ETH is still holding up well against Bitcoin. But, I mean, people can say whatever they want to say. I mean, it's basically just been bleeding against Bitcoin since the merge. Now, again, it could turn around at some point. And I'm not suggesting that, you should go make any rash decisions based on what I'm talking about in this video. If anything, I think we are getting closer to the end of this downtrend, although I don't think the downtrend is necessarily over just yet. And I will talk more about that and what I would be looking for to see the finalization of the downturn of the ETH Bitcoin pair and what could actually turn it around. Okay. So again, if you have been someone on the other side of that trade thinking that ETH Bitcoin was going to go up after the merge, and you're wondering, what's going to turn it around because it hasn't been turning around, what would cause it to actually turn around? I do want to at least provide some ideas around that and maybe some of the time frames that could ultimately correspond to. But there's two very different ways to look at Ethereum right now, and it honestly seems like people are split on the matter. Well, on Twitter, it seems like people, their mind is made up. But looking at it from a cyclical point of view, not considering any part of monetary policy, right? Not considering any part of it from a cyclical point of view, Ethereum is doing what it normally does, right? I mean, this is kind of what it normally does, whether you measure it from the lows, whether you measure it from the peak. I mean, well, it's still well off where it was at this point last cycle, but it's not doing anything vastly different, right, at this point. I mean, ETH could even drop back to these lows over here and still be above where it was in the last cycle, right? And so I want to talk about, well, if the cyclical stuff looks okay, which is probably what a lot of people are looking at, then what is the risk, right? Is there a risk? Should we be concerned about a risk? Is it just going to play out how it normally has in the past? Or is there something else that we should be theoretically concerned about? Now, for full disclosure, I think that anyone makes YouTube videos on crypto or anything, there's going to be some bias, okay? And as much as I would like to not have a bias on this, I feel like I do, and I feel like, you deserve to know that. I have not bought ETH in years. And the reason is because, as I said many times, is in terms of a risk-adjusted returns perspective, it does not provide the same level of it does not provide as attractive of risk-adjusted returns as Bitcoin does, right? Because here's the thing. Anyone could say, well, if you've been buying ETH over the last year, you've made money. That's true, right? And I'm not trying to say that that's wrong or that you should feel bad if you've made money on ETH. I'm not. What I am saying, and by the way, I do own some ETH from the prior cycle. I just haven't bought any more ETH. And the reason is because my view has just been that it's just going to keep bleeding against Bitcoin. And so I did buy Bitcoin in 2022. I also converted a lot of my ETH to Bitcoin in mid 2022, in May of 2022, right here before the first drop, right? Before the first drop. And I did convert a little bit more around the time of the merge. But I think it's fair, for me to tell you that. Because if I don't tell you that, then maybe I'm not fully disclosing what my own bias is. And again, I mean, I see no issues with my prior trades of ETH Bitcoin over in this range, right? I see no problems with it. I mean, we're way down here right now, right? We're way down here. These were all great. I mean, all those trades are looking pretty good. It made sense for me to convert my ETH to Bitcoin back then. and Bitcoin has been outperforming Ethereum. So there is some bias, I think, and I can't escape that. I'm not trying to. I'm just trying to say, look, I have a bias when it comes to it. I think that ETH is, I thought that ETH would bleed against Bitcoin, and it has. And that's why I didn't buy any, because to me, Bitcoin is a lower risk asset, but offers more attractive risk adjusted returns than Ethereum at this phase of the cycle. And that is the key thing. That is the key thing at this phase of the cycle. Everyone over the last 2 years has told me that ETH will outperform Bitcoin, right? ETH will outperform it. And their response is, well, just wait, because it's going to happen. I'm not disputing that, right? I'm not disputing that it won't eventually outperform Bitcoin if you measure it from whatever the low ends up being to whatever the high ends up being, right? Of course, but what do you tell yourself, right? Like, I mean, if you went into the merge saying that ETH would outperform Bitcoin, it's now down about 40% against Bitcoin. Right? Let me flip this back over to normal candles. From the merge high to the current valuation of ETH Bitcoin, it's down 37%. So had you just bought Bitcoin instead of Ethereum, you would be doing better, right? I mean, that's a fact. Yes, we can hope. You can hope that your bag is lifted up later on and that Ethereum outperforms Bitcoin, which I do eventually think that it will, and I would agree with that statement. But the problem is that, I mean, if you're a year early on that idea, that's still a long period of time, right? To watch the value of your ETH drop 37% against an asset that is not as risky. And that was my point, was that, look, guys, Ethereum is likely going to drop against Bitcoin at this phase of the cycle. Now, the interesting part about all of this is that what will cause it to turn around, right? What will possibly cause this thing to turn back around and go the other way? Because if you look at the beginning of the halving year in 2020, ETH Bitcoin, right? ETH Bitcoin started to trend back up, right? It started to trend back up. So it would make sense to be on alert for something like that to theoretically happen again. If you look at the beginning of 2016, you can see that ETH Bitcoin started to trend up, right? So you have two examples, January 2016, February 2016, and then over here, January 2020. But look at this. In both cases, in January of 2016, the Bitcoin halving year, and in January 2020, Bitcoin halving year, ETH Bitcoin went up. In both cases, this January, it went down. Which brings me to my next point, and that is, what if there's some dependency of ETH Bitcoin on monetary policy that we should take into account? So it definitely makes sense to look at it from a cyclical point of view, right? Measuring it from the lows or measuring it from the peak. But we also know that ETH Bitcoin has not yet convincingly made a U-turn, right? Hasn't yet. Doesn't mean that it won't. And again, I've already said for a while, it's probably worthwhile to hedge at this point. I mean, like, when it was 0.08, to me, it was fairly obviously way too high. When the flipping narrative gets that heated, it's normally time to fade that idea. Now we're down here, and there's a lot of people that think this thing is bottomed. And they could be right? They're looking, they're potentially looking at these prior trends over here and this one right here and saying, hey, this is it. There are some other ways we can look at it that would provide some level of uncertainty to that idea. One of which is, again, and we've talked about this a lot, is by looking simply at net liquidity. So in this instance, net liquidity is basically we're adding up the balance sheet of the central banks, and also we're subtracting out the TGA and the reverse repo from the United States. And when you do that, what you will see, in fact, is that last cycle, ETH Bitcoin bottomed here which is right around the same time that net liquidity bottomed before it started a larger uptrend again, right? So that is where precisely ETH Bitcoin bottomed. ETH Bitcoin also bottomed at the same time, or maybe a little bit after, the first rate cut. The first rate cut occurred in July. ETH Bitcoin bottomed in September, right? So just a couple of months later. When you're living through it, it all feels like, everything's changing so quickly. But when you look back, 2 months is nothing on this chart. These are weekly candles, right? So we got a rate cut. ETH Bitcoin bottomed shortly thereafter. So 2 examples where monetary policy happened to correspond to ETH Bitcoin turning around. A pivot in monetary policy in 2 different ways, right? In the lowering interest rate version, and also a switch from QT, quantitative tightening, to QE, quantitative easing. And in both of these cases, whether you look at the shift from higher rates to lower rates or from QT to QE, ETH Bitcoin bottomed around that time, right? That's when it bottomed. Not before, right around that time. And so it's dangerous trying to front run what could happen. And we've seen, and we know why. It's because if you constantly try to front run it, what ends up happening is it ends up basically forcing the Fed to delay, right? As long as the market goes higher, we have the wealth effect, we have inflation, and therefore interest rate cuts keep getting pushed further and further and further out. So while last year there were people pricing in rate cuts to start in March of 2023, 2023 when the banking crisis was happening, we're now a year later and we still don't have a rate cut. And ETH Bitcoin, since March of 2023, is down 20%, right? So that's the danger of front running it, because we don't actually know when the first rate cut is going to come. When we started this year, everyone was convinced it was going to be March. Then May. Now the market is now debating whether we get one in June, right? Whether we get one in June or not. So there are risks, of course, associated with front running it, sort of the shift in the ETH Bitcoin pair. I'm not saying it's not worthwhile to hedge. I'm just showing you what it took last cycle for ETH Bitcoin to turn around. And if if you sit there and your response is to say, like, roll your eyes or think that like this is ridiculous and it doesn't matter. Again, when we were at the merge and everyone was so bullish on this thing on ETH Bitcoin, it's only gone down ever since, right? You can try to rationalize it or pretend it hasn't happened, but for everyone that was calling for the flippening back over here in September 2022, after that, ETH Bitcoin dropped 44%. So we cannot hide behind deflationary aspects. We cannot hide behind the new tokenomics if it still dropped 44% after all that happened. Okay? That's my view. So we then must look at where are we in the cycle? Because if you look at Bitcoin, what you'll notice is that there's been 2 very distinct types of bull markets for Bitcoin, right? And we see them very clearly. There's your 2019 bull market, and then there's your 2020 bull market, late 2020, early 2021. And the main difference between this one here and this one was that this one in 2019 occurred during higher interest rates and quantitative tightening. The one over here in 2020 and 2021 occurred during lower interest rates and quantitative easing. And so when you look at what ETH Bitcoin was doing during those 2 different bull markets, one went to new highs, one did not. In the QT bull market, ETH Bitcoin was going down. But in the QE bull market, ETH Bitcoin was going up. So a lot of people don't really like the idea of net liquidity and tracking liquidity because they only look at it in terms of what risk assets should do on their USD pairs, right? Like if you were to overlay, say, net liquidity with the S&P 500, you're not going to get any useful insights into exactly when S&P is going to find a low, or when will it return to where net liquidity is, right? If you were to look at it like this, you can see that the S&P and net liquidity diverged back in April of 2023. So you cannot use net liquidity to tell you what the S&P is going to do. What you can say is that eventually, after there's some form of divergence between net liquidity and the S&P 500, eventually the jaws snap shut, right? Eventually. But it's hard to know. It's impossible to know how long it takes for that to happen. And, back over here, the S&P 500 rallied 44% before the jaws snap closed again. But when you look at, say, a risk asset, a higher risk asset against a lower risk asset, that's when net liquidity starts to make a little bit more sense, right? That's when you can see how net liquidity as a higher risk asset tops out against a lower risk asset. And it's not just crypto. You can also look at, say, the Russell against the S&P 500, right? And see very clearly how net liquidity tracks what's happening. Okay? So I think that net liquidity should not be used to tell you exactly where the USD valuation of risk assets are going to go. I think net liquidity should be used to inform us when higher risk assets are going to start durably outperforming lower risk assets. That's what I think. Look over here during QT, the Russell was underperforming the S&P 500. The minute we got all this QE, look what happened with the Russell against the S&P. The Russell rallied 47% against the S&P 500. 47%. Why? Because all that QE came flooding back into the market. That liquidity came back. All the beaten down companies that were not sure if they were going to survive were now flush with liquidity. So they started to drastically outperform the higher market cap stuff, the lower risk assets, because they finally had some liquidity. There was no longer this drag on the economy they were fighting off for so long. So that, I think, is a relevant way to consider the cycle, right? And again, this is a very valid way to consider it as well. And I'm not saying that you should ignore this. These are my own charts, right? Hell, these are my own charts, right? I'm not saying that we should ignore it. But what I'm saying is that the reason that I have veered away from ETH is because I just kept my portfolio Bitcoin heavy, right? Because the Bitcoin dominance has been in a massive uptrend ever since the merge. And remember, last cycle, Bitcoin dominance topped out in September, which, by the way, if we add on here the balance sheet of the Fed, September is exactly where the Fed pivoted. September of 2019. That is where Bitcoin dominance topped out. It's pretty clear, right? And I've seen everyone call the top on dominance 10 times basically over the last couple of years. And every time it just keeps on going higher. And my bias is that it will continue to go higher because there hasn't been a pivot here. There has not been a pivot. And so until there is, my bias is that dominance will continue to climb. That doesn't mean it can't have pullbacks. I can't tell you. How many times have we watched Bitcoin dominance pull back over the last 2 years? How many times? And how many times did it feel like dominance was crashing and it was never going to recover? And then you look at it, right? You look at it. And the same way we looked at monthly Heikin-Ashi candles for ETH Bitcoin, let's do the same thing for dominance. We look at it and we say, well, hell, Bitcoin dominance has not had a single red Heikin-Ashi candle on the monthly time frame since November of 2022, right? And how many times have you probably looked at the dominance chart thinking that, oh, this is it, right? The top is in, right? It's over. And that was it. And then you just give it a couple more weeks and it keeps on climbing. And one of the reasons it keeps on climbing is because looser monetary policy keeps on getting pushed further and further out. And it just keeps on going up. Dominance keeps on climbing. So with that in mind, when you look at last cycle, the dominance rally was already over in mid 2023 so the pre-halving year. It was over in the pre-halving year. The dominance rally was over. This time, it's continued on. So that is the justification for thinking about ETH, not only in terms of a cyclical point of view, which is valid, but also in terms of what is monetary policy looking like. Because, in my opinion, there is clear evidence that it is dependent on monetary policy. Because if it were not, then we would have expected Bitcoin dominance to top out long ago, and it hasn't. It just continues to put in new highs, right? I mean, every month or so, it just puts in a new high. It just put in a new high not too long ago, right? So I think there's justification there to suggest that we should consider not only the cyclical aspect of Ethereum, but also ETH as it compares to monetary policy. Now, what do we do with that, right? What do we do with that? Well, one thing I think to consider is to consider what ETH did going into the actual pivot that we saw last cycle. Remember, we had an inverted yield curve in 2019. People just ignored it. We have an inverted yield curve now. People are ignoring it, right? Because it's hard not to, right? It's been inverted forever. What are we supposed to do? I mean, just talk about it every single day. It's been inverted since the summer of 2022 when you look at the 2 and the 10-year yield, and it's been inverted for a little bit less than that if you look at the 3-month and the 10-year yield. It's been inverted for a long time, and I think it is easy for people to just ignore it because, again, it's been almost 2 years since the 2-year inverted the 10-year. It's a long time. It's a long time, and especially in an investing world, that's a very long time. But because, and again, if I have not won you over in terms of thinking of ETH Bitcoin as it relates to monetary policy, then you're not going to be interested in anything I say about that comes next, right? I mean, you're probably more interested in just what it's doing like this from a cyclical point of view. And I'm not here to rain on your parade. I mean, look, it's been doing just what it always does, right? So if you have a large position on ETH, I mean, maybe you don't care that it's down against Bitcoin. That's the risk you took. It's still up against the US dollar, so you don't care. And that's fine. And I mean, truly, I hope that, I hope that it works out, right? And I think it very well could, especially over a longer period of time. And in the short term, right? I mean, momentum has still been going up. So if you at least believe that there's some justification to think about Ethereum in terms of monetary policy as it relates to Bitcoin, then we must look at how it performed last cycle as QT came to an end. That's what I think we should do. And if you do that, and if we look at where the balance sheet was of the Fed, and if we overlay interest rates, it's pretty clear that ETH rallied into the first rate cut. And it rallied on its USD pair until the Fed shifted from QT to QE. Now, why is that, right? Because it would make sense, if you just think about it, it would make sense. Okay, well, QE means money's coming back in. ETH should go up. QT, it's, the Fed's basically trying to pull liquidity out. The problem is that, especially in an inflationary cycle, which is what we're in right now, for them to go back to QE would be an acknowledgement that the economy is weakening. And so far, the economy has been very resilient, and so risk assets continue to climb higher. If they were to pivot at some point this year, it would, in my mind, be an admission that something's potentially wrong in the economy. Maybe they need to cut rates, and that's often why risk assets are going down. The Fed does not, it's not a Fed pivot that causes risk assets to sometimes go down. it's because risk assets start to go down, the Fed has to pivot, right? So we must understand the cause and effect. And of course, there are times where the Fed pivots and risk assets don't go down because we're not going into an economic slowdown, right? There's also that case to be made as well. But you can see pretty clearly that ETH rallied into the first rate cut, and it also rallied as we entered into the final stages of QT just before QE started to resume. Why is this important? Well, at the last FOMC, Powell came out and said that they're going to start discussing balance sheet issues at the March meeting. So we can expect some form of communication from Powell at the March meeting, March 20th, so about a month from now, as to what they're going to do with monetary policy, right? With what they're going to do and how they're going to taper, if you will. And so what's fascinating to me is that it seems like at some point we're going to get a cut, right? And it seems like at some point we're going to get a Fed pivot from QT to QE, but it's hard to know when that is. But what I find truly fascinating is not just the fact that we're rallying into a potential rate cut and we're rallying into a potential pivot from QT to QE. What I find fascinating is how this move here is exactly an order of magnitude higher than this move here. Okay? Now, I'm going to show you what I mean, and I don't know if it's just a coincidence or not. It probably is a coincidence, so I'm not asking you to take this to the bank. They're not going to cash it in. They'll probably laugh you out of the bank. But if you look at these two moves, they do look very familiar. And we're going to take a very close look at them. So we have this first move. Let me pull this back here. I don't know why I drew it that far out. So you have two moves during high interest rates and quantitative tightening. And what you will notice if we get a price label, do you see this low here? 105. This low here, 1,096. So that's about a 10x move, right? It's about a 10x move. If you look at this low here, 84. I think it was actually lower if you get the wick. If you look at this low here, 900. About a 10x, right? It's about a 10x move. Not exactly, but approximately a 10x move. And then if you look at this low here, just before we shot out of the wedge, right? So it was an ascending wedge, and we broke it to the upside. And just before we did, we hit that level there on the wedge at 148. And then this third tap here, this was the third hit of the wedge, right? 1, 2, 3. The third tap hit 148, and then it shot above. The third tap over here, if we go right there at that level, 1,500, right? A 10x, right? Essentially a 10x move from that low. So you put in a low, a higher low, and a higher low, and then a low, a higher low, and a higher low. All of these three levels are essentially a 10x move off of exactly the same pattern that it carried out back over here in 2019. It has taken place over a longer period of time, admittedly, but also we should recognize that we have not yet seen a rate cut. We haven't, right? We have not seen a rate cut yet, and so that's potentially one reason. But then after that, right, after that move, we then came all the way up to around 270 and then had a pullback to the 220s to 230s, right? So 270 with a pullback to 220 or 230. And look at this, right? We went all the way up to 2,700, and then we got a pullback to around 2,200 to 2,300. Is it not the same thing? I mean, is it not? Again, if you don't buy that monetary policy has any effect on this, then you don't care about this. You're more so interested in these charts. Have at it, right? Have at it. I'm just pointing out that there is this, right? Like this is what we saw last cycle. And then ultimately what happened after all of that, right? Let's clean this up a little bit. You see all the comparisons, so let's just clean it up and redo it. What ultimately happened here Let me connect the dots again. So what ultimately happened is we finally broke the wedge to the upside, right? In May of 2019. And then we came back down through it at the end of the wedge, right? I mean, we actually came back down through it and then ultimately came all the way back down here. But what you'll notice is that on a weekly close, ETH went up to $300. Okay, so it went up to $300. Now, we've already gone up to near $2,900, right? I mean, we've come pretty close to 3,000 ETH already, but it just goes to show just how similar the move is. We actually had a wick all the way up to 362. That wick happened on a single day, and then the following day basically marked the collapse. So, could that happen again is the question, right? Could ETH be going into this sort of this area over here, right, where it puts in this high, it gets this pullback to 220, 230, and then it gets the final move higher, right? That final move higher. And you go look at it over here, right, after it just had a pullback to 2,200 to 2,300, again, a 10x difference. Now it's getting that same type of move. So I do wonder, is it carrying out this same exact thing where it pushes up just a bit more and then it falls? But why would it fall? Why would it fall? Well, could it fall and still maintain the integrity of the cyclical charts? I would argue that it could, right? And the reason for that is because from one cycle to another, we would expect diminishing returns, right? So I would not expect this to keep pace for the entire cycle, just like cycle 2 did not keep pace with cycle 1, right? So at some point, I would expect the current cycle to not keep pace with the last cycle. As much as, you know, as much as I'm sure everyone would just love for it to do that, Bitcoin shows us that that is not something that happens, right? Eventually, we put in diminishing returns from one cycle to another. Every cycle, the final ROI was lower than the cycle before it. So I don't know why I would assume this cycle will be different for ETH. So in that regard, we could see ETH even go up. I mean, it of course could go up just like it did last cycle and go to those levels and then break down, and it still not break the cyclical nature of Ethereum, right? I think that both views could theoretically be correct. In the same way, if you were to look at it as measured from the peak, ETH, even if it were to go higher, right, even if it tagged up, say, this high right here, even if it were to come back down and you know, test some of those lower levels again, it could still maintain the integrity of this chart. Hell, at this point in the prior cycle, I mean, let's say we're currently on day, you know, 830 or so, but you can see in the last cycle, by day 916, we were all the way down here, which is lower than where ETH already went on the daily closes. So what I'm trying to say is that it doesn't necessarily have to be one or the other. They could both be theoretically good ways to look at the market from a cyclical point of view, with some admission that, look, while it could climb higher, there's still plenty of room over here to retest some of these levels and confirm that they're going to hold before gaining enough strength to go higher, theoretically, during quantitative easing, which at that point, I would expect the ETH or Bitcoin valuation to go up. But I don't expect that to happen until there's a reason for the Fed to pivot. And at this point, with inflation staying as sticky as it has been, what reason does the Fed have to pivot? If you were to go look at headline inflation year over year, it just keeps staying at 3%. So one of the things that occurred last cycle is, right, there's a macro risk, right? It's the macro risk. It's the uninversion of the yield curve, just like it was in 2019. It's that risk that leads to the potential sort of retest, if you will. If you're not familiar with what I'm talking about with the yield curve, look at Treasury yield spreads and look at the 3-month and the 10-year yield, and look in 2019 when it uninverted. When did it uninvert, right? You can see that it uninverted in October of 2019. We actually got it again here in 2020, but we had an inverted yield curve, right? And it uninverted. The process really started late September into October. That's when it uninverted. When it uninverted, is right around the same time that the ETH Bitcoin pair bottomed, right? So ETH Bitcoin bottomed right around the time that the yield curve uninverted. One of the reasons, of course, is because that's when we shifted to QE. It was the uninversion of the yield curve that led us to shift in QE. Why would that mean something? Well, if the yield curve is going to uninvert through, say, a bull steepener, it would mean that the short end of the yield curve is going down, right? So if you were to look at the yield curve, the treasury yield curve, if the short end of the yield curve is going down, that means that the market is then expecting the Fed to pivot because something's happening in the economy and we need to get to looser monetary policy, right? So if the short end of the yield curve were to go down and we get an uninversion, it would imply that something's happening, right? Because right now the market keeps pushing rate cuts further and further out. So if we do get an uninversion, it means the market thinks that the Fed has finally seen enough and they're going to go back to QE. And if that's the case, that means ETH Bitcoin could bottom. But we haven't seen that yet, right? We just simply have not seen that process take place. So what happened here that led to ETH Bitcoin, that led to ETH USD finally dropping, right? What was it? After it made this move into the 300 range, the 300 to 360 range, which we're getting pretty close to, right? We're almost at 3,000. Well, what was it that happened? Well, it was not only the process of the uninversion of the yield curve, but it was also the breakdown of the ETH Bitcoin valuation. If you look at the ETH Bitcoin valuation, you will notice that it was precisely here in July of 2019 when ETH Bitcoin broke down. And in July of 2019, that is where ETH USD started to go down. And that is where ETH USD went back through this wedge and came all the way back down here. You will notice, in fact, that this low that ETH put in December 2019 was actually slightly above this higher low right there. This higher low here happened to be around $1,000. So if it's going to play out in a similar fashion, which very well might not, it would imply going back and testing that level, right? But again, you will notice that this drop did not occur until after the ETH Bitcoin valuation broke down, right? It was after ETH Bitcoin broke down that ETH USD finally got this drop. And where are we today, right? Where are we today? We are close to seeing a very similar process play out because ETH Bitcoin is at 0.05429. And these lows over here are around 0.049. So if ETH Bitcoin were to break below this low, then that would imply that ETH USD could finally see a larger pullback. But it hasn't happened yet, right? It hasn't happened yet. And I don't know how long it's going to take to happen, but I will talk a little bit about that. One of the things to look at with ETH USD is that, you can see, again, it's at 2,800 right now. As long as Bitcoin goes up, ETH can go up. Now, some people are going to say that's not true, but if that's not true, why has ETH Bitcoin been bleeding the whole time, right? The fact that ETH Bitcoin is bleeding in an ETH USD uptrend suggests that the reason ETH USD is going up is only because Bitcoin's going up, because ETH Bitcoin keeps on bleeding. And if Bitcoin were to go down, then I imagine ETH USD would go down. So how can we use this? How can we say, well, why does ETH Bitcoin, how can we say that this happened one time in the past, therefore it has to happen again? We can't, right? We simply cannot do that. And this is where I get in trouble, is because some people look at this sort of analysis and they plan out their entire strategy around it, right? I'm here to tell you that in the long run, you're probably much better off coming up with a DCA strategy than listening to this stuff. And it'll probably help you sleep a lot better at night. And even if it ends up being true, was it really worth losing all the sleep over? Probably not, right? But there is another example where the same thing happened, right? So it's not just a single time. It also happened another time in the past, where we have another example right here where ETH Bitcoin broke down. ETH Bitcoin broke down in November of 2016. And wouldn't you know, in that same time period, right, that is when ETH/USD dropped about 55%. And here, after that top, when ETH Bitcoin broke down, ETH/USD dropped around 66%. But in both cases, that drop occurred after ETH Bitcoin broke the prior low. In both cases, it was after the ETH Bitcoin pair broke the prior low. What you will notice on a monthly time frame when you look at ETH Bitcoin is in all these cases, right? Well, in both cases, I shouldn't say all cases, right? In both cases, what ended up happening was you had 3 strong red monthly candles to finalize the ETH Bitcoin downtrend, right? You had 1, 2, 3, 1, 2, 3, and here we are, right? Are we going to get 1, 2, 3 to then mark the low on the ETH Bitcoin valuation, which probably could happen, I don't know, maybe around sometime mid this year. If we were to get a red candle, a strong red candle, let's say in March, perhaps it would be March, April, May. Maybe it would be March, April, May, and perhaps we get a cut in May, or maybe it doesn't happen until April, and then it's April, May, June, and then you get a cut in June or something. I don't know. Right now, the market thinks that the first rate cut will come in June, but again, these things can change very, very quickly. And to some degree, if inflation data continues to come in hot, then a lot of these rate cuts might get priced out. But the funny thing about the rate cuts getting priced out is the very act of them getting priced out might eventually cause them to get priced back in, because if they all get priced out, then some of these risk assets might say, so we're not going to get looser monetary policy, and then the market could react, and then as opposed to getting rate cuts for sort of preemptive reasons, you get rate cuts because the market is not doing as well. So I go back to this idea of how do you get that move to the downside? Well, in both prior cases, the moves to the downside occurred on a risk-on rally by Bitcoin USD, right? So over here, when in late 2016, Bitcoin was going up and it broke ETH Bitcoin down. Over here in 2019, Bitcoin went up, put in a local top right before the Fed pivoted, and it broke ETH Bitcoin down. Here we are, right? Will Bitcoin do the same thing again? Now, one thing to consider as we continue to look at this, this entire thing, is that Bitcoin, and first of all, it's at 50, it's between 51 and 52K. But last cycle, we know, we've talked about this 1,000 times probably. We know that Bitcoin USD stayed risk on until Bitcoin dominance passed the 0.5 fib retracement. So if we were to overlay Bitcoin USD onto this chart so you can see exactly what I'm referring to, you will notice, in fact, that right here, when Bitcoin dominance crossed the 0.5 fib retracement, that's when Bitcoin USD topped. Let's look at it on a weekly time frame so we don't tune out the actual high, right? That's when Bitcoin USD found a local top, when Bitcoin dominance passed the 0.5 fib retracement. This cycle, the 0.5 fib retracement for Bitcoin dominance happens to be 56%, which coincidentally is just higher than the prior high. What do you notice about the last cycle? We had a very similar structure where we were putting in these highs and we were struggling to break through, right? We put in a high between the 382 and the 0.5. Over here, we got a high between the 382 and the 0.5 on Bitcoin dominance, and we kept testing it just like we keep testing it over here. And then finally, Bitcoin dominance shot above it right before rate cuts arrived, and by the time it hit 0.5, by the time it hit the 0.5 retracement, that is actually where Bitcoin USD found a local top. We are not that far away from it. Dominance would need to go up about a little more than 2% from where it currently is. Go from 53.65% all the way up to approximately 56%. And at 56%, it would then reach the 0.5 fib retracement, which is exactly where last cycle ETH Bitcoin broke down. And it's exactly where, right? That's precisely where the Fed pivoted, was when Bitcoin dominance reached the 0.5 fib retracement. I have often wondered if Bitcoin, one of the great use cases of it is to just better understand liquidity in the markets, right? It's a great insight into how the consumer is doing. And I know a lot of people just think dominance has already topped because every month I see the comments everywhere saying that it has, but every couple of months it just keeps on going higher. So what if this is the case, that when Bitcoin USD hits a level that causes Bitcoin dominance to hit that 0.5 fib retracement at 56%, which precisely could correspond to ETH Bitcoin breaking down, which could also correspond to ETH USD finding a local top before dropping. I think that could happen, right? I think that could ultimately happen. And note that in both of these prior downturns, right, after ETH Bitcoin broke down right here, ETH USD went to the bottom of its regression band. When ETH Bitcoin broke down right here, ETH USD went to the bottom of its regression band. I'm assuming ETH Bitcoin is going to break down somewhere in this range, and this is the USD chart, and then perhaps from there, ETH USD could go down to the regression band. It's just taken forever to play out, right? And I get, it's frustrating. It's frustrating for me too. But you also have to understand that, since June of 2022, right, if we look at this, it's gone up 200% over 88 weeks, which is a great move. But Bitcoin's done better, right? Bitcoin's done better. And last cycle, from this low here, December 2019, to this high, over 72 weeks, a shorter period of time, ETH USD went up 3,600%. So you have to understand, from my perspective, it's frustrating how all this dunking continues on Twitter because of these views, because people are looking at it like, oh, well, ETH just keeps on going up. And I'm like, well, guys, it's up. It's not even up as much as Bitcoin is. And in the same time period that it went up 200% during QT and high interest rates, last cycle it went up 3,600% during low interest rates and QE, right? Those are the moves that I really like. Some of you guys really enjoy these moves, where it goes up 200% and loses value against Bitcoin. I really enjoy the moves where it goes up 3,000% and gains value against Bitcoin. But to each their own. So this, I think, is a relevant way to look at the market. And I still think you could say that all that could play out and it could still follow market cycle behavior. It could certainly follow prior market cycle behavior. Another way to look at this is the timing of it all. If you look at this wedge, right? If you look at this wedge and you take a time frame, right? A range here from this low here to this low, it was 8 weeks. And then this low to this one over here was 12 weeks. And then this low to this low here, sort of breaking down, was another 12 weeks. Okay? So keep that in mind. Because there's some time components here that are actually somewhat, somewhat interesting. The time component of all this. So you had 8, 12, 12. Okay? Now what we're going to do is we're going to go over here and look at this cycle and see how it is comparing. We connect the dots and then connect these dots. I'll just extend it all the way out. Okay? So 8, 12, 12. 8 weeks, 12 weeks, 12 weeks. Now look at this. 24. And then what is this? I guess it depends on which low you take. There's several in here. I might actually have to zoom in to get it a little bit better. I don't remember which one was the actual low. This was 1517. This was 1530. That was 1521. So I guess it depends on which one you take. If you take this one, that's 37. Right? So 2437. 37 weeks from that level puts you out in April. Puts you out in April. If you say take it from a different, sort of later on, let's say you take it like the midpoint, right? Take it from the midpoint right here. Or maybe you just take it from the last test. But if you take it from like the midpoint, about 41 weeks. about twice as long, in fact. 41 weeks from that low right there puts you all the way out in the summertime. And I've expressed some, some concern with after we get past the spot ETF, and after we get past the halving for Bitcoin, and after we get past the resolution of the ETH ETF, is that when we finally get an inversion of the yield curve? And that's when all this stuff finally plays out, after all these narrative events are over, all these major events that we look forward to. And if you look at how long it took after that secondary low until ETH USD hit a high, it was 8 weeks, which was precisely the amount of time that this first move was. So if you look at that and you say, well, what was 24 weeks after that low? It puts you in February, right? February, March, depending on when you take this low from. And I've said before, there's this idea that Bitcoin's rallying into the halving. Just like ETH rallied into the merge. Remember, ETH topped out before the merge on its USD pair, but it topped out on its Bitcoin pair on the day of the merge, right? So I guess if you were to relate that to Bitcoin, it could mean Bitcoin, finding some type of significant level in March, Bitcoin dominance going higher in April and May. That wouldn't be that surprising. Remember, last cycle, Bitcoin USD found a local high in June, but dominance continued to rally until September. So you could have an example where some local high is eventually found, we get a pullback, and then at that point, dominance continues to go up. And again, I'm not saying that, I'm not suggesting that it has to be, some groundbreaking event. I'm just suggesting, hey, at some point, believe it or not, we'll have a larger pullback with Bitcoin, and that's where this stuff could, for Ethereum could finally play out. I get it. I mean, when Bitcoin's rallying like this, everyone just wants to put on their rally caps and assume that it never gets a big drop. But, 2019 QT phase, we also got very shallow drops, 12% drops, 15% drops. By the time we actually had a larger drop and everyone was finally thankful that a larger drop came, we then continued to drop for a while. So, just something to think about, right? I mean, again, I'm not suggesting that Bitcoin can't go higher. I've said before that it could certainly rally into the 56% dominance level. But I ultimately think that if you look at the last two cycles for Ethereum, ETH Bitcoin broke down on a Bitcoin rally. And what's fascinating is these patterns are very similar to each other, right? I mean, they're almost identical, in fact, right? I mean, you have for ETH Bitcoin, you have your lows, and you have your peaks, right? You have your first peak, you put in a low, and then your secondary peak, right? Same thing. Your first peak, you put in a low, and then your secondary peak, right? Your first peak here, you put in the low, and then you get your secondary peak. All the secondary peaks were lower highs, and then after those lower highs, we came back down to the range lows, and then here back down to the range lows. We got a bounce in both cases, and I'll say all three because we got a bounce over here too, right? We got a bounce. But eventually, in these two cases, we eventually broke down. ETH Bitcoin eventually broke down, and I think it's probably going to eventually break down again. I don't know why. I mean, maybe it doesn't, right? Maybe I'm wrong and it doesn't, but that's what happened the last couple of cycles. And I think that it could certainly, it could certainly play out like that again. And I don't see why it would have to be that, controversial. I mean, it's already been bleeding 40% against Bitcoin. What's another 20%, right? And also, I think there's some relevance to the idea of ETH Bitcoin on some form of logarithmic regression growth curve, right? Where it's sort of honing in on whatever the fair value is, right? But the problem is that everyone looks at these higher lows, but a lot of other people ignore the fact that it's putting in lower highs. What if it's just sort of converging, to sort of the whatever the fair value is of ETH Bitcoin, and maybe that's what it's happening. Well, maybe that's exactly what's happening, is sort of converting. It could come back down here and then still be putting in a higher low, right? I'm not calling for 70% Bitcoin dominance. I'm calling for 60%. By the way, a lot of people are going to push back on the whole Bitcoin dominance stuff and say, Ben, market's different now. I mean, the market's completely different. Not only are all the altcoins so much better, but they're stable coins now. So, what are you doing looking at Bitcoin dominance? Well, again, we also have Bitcoin dominance excluding stablecoins. I mean, on the website. Again, you can access this stuff into the cryptoverse.com. We have a free tier, by the way. We don't have all the charts on the free tier. We have some charts. This is excluding stablecoins. Okay? This move right here that we're in looks very similar to this move over here just before rate cuts arrived, right? Where you're putting in some lower highs. You're sort of trending down a little bit, but eventually it broke up. And eventually we saw a massive breakup in this, and I think that's what's ultimately going to happen this time. But what we could do is we could say, well, let's take this idea to heart and say, well, what if we include something else, not just Bitcoin dominance? What if we include ETH in there? I've often said I think ETH is a blue chip. That might come as a surprise to you, because if you've been watching my channel, all you've heard me say for the last 2 years is why ETH is going to bleed against Bitcoin. But ultimately, I think ETH will turn it around, and I think that time is coming up probably in a few months on its Bitcoin pair. The funny thing is, last cycle, when it bottomed out on its Bitcoin pair, it then topped out on its USD pair, right? So, you could get to a point where like everyone celebrates that it's finally bottoming out on its Bitcoin pair, but then it puts in some type of local high on its USD pair and then trends down for a while. That's what happened last cycle, so be prepared for that. Is it not fascinating that despite all the stable coins, the Bitcoin dominance plus Ethereum dominance found a local high at 73% just before rate cuts arrived? And it finally broke it just before rate cuts arrived. Look at where it found this local high in December of 2023, 73%. I mean, it's the same level. And we have stable coins. It's the same level, despite the fact that the stablecoin market is a lot larger of a percent of the market cap of crypto today than it ever was back then. So I look at this stuff and I'm like, gosh, I mean, like, yeah, we have stable coins, but the Bitcoin dominance plus ETH dominance is following the same thing it's always done, right? What if it's just an oscillator between 80% and 60%, give or take, and we sometimes deviate outside of it, but you're basically going from 80 to 60 or so, right? With some deviations above and below, but that's what's happening. And what's fascinating is when Bitcoin dominance plus ETH dominance broke through here, that's precisely where ETH Bitcoin broke down and precisely where ETH USD topped out, and that's where the Fed pivoted, was when that happened. I'm not saying the Fed's watching our crypto bags to try to tell them when they're pivoting. I'm saying crypto represents the average consumer's health. Everyone, we're all degens at heart, right? Let's be honest. We're all some form of a degen at heart, and we want to take investments in risky assets and make a lot of money. That's why we're here. You can pretend like we're all here for the tech, but the way we're not here, everyone's not here for the tech. All the Bitcoin guys on Twitter that used to be, all about in it for the tech and all that stuff. Now they can't stop talking about spot ETFs where you don't own the keys to your crypto. Okay, so clearly a lot of people that claim they're in it for the tech are actually here to make money because they're more interested in where the next money in the space is going to come from. They don't care that the people buying those ETFs don't actually own the keys to their crypto, right? If they did, if they cared about that, I don't think they'd be promoting it all the time. Again, I'm not saying there's not a market there for it. I think there's a lot of people out there that could benefit from something like that because they don't want the responsibility of all that stuff. But my own perspective is I don't trust. I'm not going to sit here and trust all this other stuff, all these other places, these centralized platforms with the keys to my crypto. Look what's happened to all the places that occurred. Think about it last cycle. I mean, there's so many different companies that went down. FTX, BlockFi, Celsius, Voyager. There's so many different ones that went down. And everyone back then, not everyone, a lot of people thought all those were safe and they still went down. I'm not suggesting that, your institutions today face the same type of risks as those do. There is a lot more regulatory oversight, but it's not to say that the risk doesn't exist. And it does exist, right? And so that's something you have to keep in mind. But that's clear evidence that not everyone's here in it for the tech. They're here to make money. Let's just be honest with ourselves. So when you look at this, when Bitcoin dominance plus ETH dominance finally broke through, let's call it 73%, That's what marked the ETH Bitcoin valuation breaking down. And that's also what marked the ETH USD local top at 73%, breaking through 73%. Now, you might say, well, Ben, you're still excluding the stablecoin market. Well, why don't we include it? Instead of just, let's just add in USDT dominance. What do you notice? What do you notice? It still looks like an oscillator where it tops out around 82%, and it has deviations down here below, but it bottoms out around 60%. Still looks like an oscillator. And guess where we are? We're at 76.59%. Do you see here what level did it get to when ETH Bitcoin broke down? It got to around 78%, which we're getting pretty close to. So the way that something like that could happen is if you get a move by Bitcoin where ETH tries to keep up, but it just simply cannot keep up because the money's flowing into Bitcoin over ETH. That doesn't mean ETH can't go up. Bitcoin can lift the boat, right? It can lift, a rising tide will lift all boats. But isn't it fascinating how, at the end of the day, Bitcoin dominance plus ETH dominance plus USDT dominance is still sort of like an oscillator. And we're nearing the point where precisely last cycle is where ETH Bitcoin broke down. If you were to look at all Bitcoin pairs, look at total 3 minus USDT divided by Bitcoin, what will you notice? Is that it's about to break down. Well, maybe not. We'll see. It's at 44%. You can see last cycle, once we put in a low, it took 42 weeks for alt Bitcoin pairs to break down. We're currently at around 34 weeks. 42 weeks puts you in April. What's happening in April? The Bitcoin halving, right? The Bitcoin halving. So what if we get a dominance rally into April? And the dominance rally into April right around the time we had a dominance rally into the spot ETF. Why won't we have one into the halving? This whole thing's been narrative driven, event driven. So what if alt Bitcoin pairs drop down below support right around that time? Either March or April. That seems like a viable outcome to me. March or April for alt Bitcoin pairs breaking down. One thing to consider is that last cycle, alt Bitcoin pairs broke down before ETH Bitcoin did. In fact, alt Bitcoin pairs broke down the week of June 24th when Bitcoin USD topped. ETH Bitcoin did not break down until the week of July 8th, 2 weeks after Bitcoin USD put in a local top. You see that right here? July 8th. That's when ETH Bitcoin broke down. So if alt Bitcoin pairs do break down, they may be a leading indicator that ETH Bitcoin will also break down because ETH stayed stronger longer than the altcoins. That's what happened last cycle anyways. So there's another chart we can look at, USDT dominance. I talked a little bit about this a few weeks ago, and I said that there's a good chance that it's going to get rejected here by the bull market support band. Remember? And it did, and now it's going down. The funny thing about USDT dominance is every single time it hits this trend line, it has marked a local top. January 2018, local top. June 2019, that was the QT top from the prior cycle. February 2020, just before the pandemic. May of 2021, that was before the 50% drop by Bitcoin. November 2021, the beginning of the bear market. Where does it sit now? We're not at it right now, right? We're not at it. It is at around 4%. We're currently at 5%. But here's the thing, and I said this, if you guys go back and watch the USDT dominance video that I did a few weeks ago, I said that if it gets rejected here, it can move down quickly. And it got rejected at around 6.4% at the 20-week SMA or 21-week EMA. It's down 20% since then, right? Well, you're taking 1% of a percent, so let's not get carried away, but it's down from 6.5% to 5% in only 2 or 3 weeks. So how long is it going to take to go from maybe 5% to 4%? I don't know. But there you have it. I mean, if it were to go to 4%, it might mean there needs to be some form of rebalancing in the Cryptoverse. Just like every time we hit this trend line in the past, there was some form of rebalancing in the Cryptoverse. Another way to look at all this is, again, if you go look at ETH USD and when it actually topped out, when it found a local top in the 300s and when it broke down, it actually broke down into the end of this wedge, right? Well, the end of this wedge over here the end of this wedge is all the way out in like August, right? I'm like, are we gonna have to wait until August? I hope not, but I don't know. Maybe, you know, I mean, it might not take that long, but what if it does? I don't know. I'm not gonna say that it can't. Um, the funny thing is that, you know, if you look at total market cap, take a look at this. This is kind of interesting. If you look at like total market cap, look at a parallel channel, you connect this dot here to this one up here, and you extend it down, and you sort of connect, I'm trying to get it perfect, but I mean, it's hard to get it like perfect. Connect these wicks up at the top, right? What you'll see is that, you know, you're connecting these points here, and you're connecting that low and then sort of the weekly close of the pandemic low. I mean, you know, it's over here, right? The funny thing is if you take the prior total market cap low and extend it all the way across, it actually hits that level in September of 2024, which is crazy because that's still half a year away, right? And I'm not suggesting that it has to go back down there, but I'm saying, hey, like it could, and if it does, we have to be prepared for it. And funny enough, the local top in 2019, just as QT ended, was at the midpoint of this trend line, and we are approaching the midpoint of this trend line, which is just over 2 trillion. We're at about 1.89 trillion right now. And again, you might say, well, what would take us back down? Nothing has to. Again, I'm sure everyone's going to have a field day with this video. They normally do. And normally I get mocked for weeks after this sort of stuff. And I think some of it's probably somewhat valid, to be completely honest. But it's just a risk, right? I mean, it doesn't have to happen. Maybe we just slice through this trend line midpoint and we go back up, and none of this matters. It's just something to think about. You know, I mean, I remember in 2019, no one was calling for it to go back down. I was calling for, you know, a massive rally up to 300K back then. No one was talking about anything like that. You know, not a lot of people were anyways. So every cycle is different, you know, certainly, but it is something to keep in mind. And, you know, there have been some delays in terms of looking at like this cycle compared to sort of last cycle. And that's like the idea that, you know, last cycle, ETH Bitcoin, if we look at like monthly candles, if you look at monthly candles here, if we take a range here from this secondary top to the actual low, it was 19 months. From this secondary top to where we currently are is 17 months, right? 19 months coincidentally puts you in April, around the halving, right? Around the halving. And so I just wonder if we're just repeating history, you know? But the interesting thing is that this secondary top occurred in February 2018, whereas this secondary top occurred in September, right? February to September. Half a year later, right? About a little over half a year later, 7 months later. And then this low here occurred in September of 2019. Well, if you go out 7 months from September of 2019, that would put you in April of 2020, right? April of 2020. So it's just funny because if you extend the second peak here to take place 7 months later, and then you extend this low to take place 7 months later, that puts you in April, which happens to be the Bitcoin halving, right? Which, by the way, also happens to correspond to potentially the first rate cut. So we're going to say, well, there's not a meeting in April. Yeah, I get that, but there's a meeting in May, and it's on May 1st. So close enough, right? That's pretty close. So just something to think about. You know, if ETH does rally on up to 3,000 or whatever, or even above, what I would look for is it doing so on ETH Bitcoin strength or ETH Bitcoin weakness? If ETH Bitcoin is going up and not fading, then that might be evidence that it's different and it's not playing out like the last time. But if ETH USD is rallying and ETH Bitcoin is collapsing, then that might be the sign that, hey, something's wrong. And the reason ETH USD is going up is only because Bitcoin is. And the minute that hype train cools down, that's when you could see ETH USD cool down as well. If you go look at the fear and greed index, we actually recently hit 79. And I'm just sort of pointing it out because we got into extreme greed And at least we've seen before it top out, at least the QT rally in 2019 found a local high in the 90s. This one over here, we were in the 90s for a long time. But if you see the fear and greed index go into the 80s or 90s, especially the 90s, it might be time to say, all right, we need a larger pullback. Again, I'm not suggesting that it has to be like a massive, absolute catastrophe. I'm not suggesting, that it just goes down and never recovers. I'm just suggesting, look, I mean, at some point there will be a cool down in the cryptoverse, as hard as it is to believe. And when that happens, I would expect ETH to cool down with it. So that's also something to think about, right? And I mean, there's other evidence. I mean, if you look like year-to-date ROI of ETH Bitcoin, look at this. Look at 2024 and look at it compared to, say, like 2020, right? It's not yet following what 2020 did. Not at all. Maybe because monetary policy hasn't shifted yet. Maybe that's why. I want to make sure I cover everything. I think that was most everything. We talked about stablecoin stuff. We talked about, and again, like you might say, Ben, there's nothing that's going to slow this train down. You could be right. I mean, look at the, the stablecoin market cap is going back up. I mean, certainly the momentum is there. I think the main risk is, of course, a theoretical macro risk that may or may not materialize. And a lot of it goes back to like the unemployment rate, right? I mean, it's sort of this like slow moving thing that takes forever to play out. The problem is that once it starts to move up, it's then very hard to stop it, right? Like it's strong until it's not. And then once it's not, it becomes very weak very quickly, right? I mean, it can struggle at the lows to go up, but then once it starts to make that break, it's really hard to stop it. And that's what causes the Fed to panic cut. If you look at it with respect to, say, like a longer term moving average, this here is the 24-month SMA of the unemployment rate. You can see that like almost every single time we break above it, it just keeps on going up eventually, right? We might oscillate around it for a little bit, but like we did over here, right? We got above it, we came back below, but eventually it skyrocketed. In all these prior cases, that's what's happened. I mean, you don't really find many examples of getting above it and then not continuing to go up for a while. And so I think that is the risk. It's not a crypto risk, right? I'm not suggesting that it's a crypto risk. I think a lot of the crypto risk all that stuff got washed out, I think, back in 2022. Like all the fraud and all that rampant speculation and leverage. I mean, so much of that stuff got washed out in 2022. So it's not a crypto risk that the cryptoverse faces. It's a macro risk, right? It's the risk that, the people don't have jobs and they're not going to be speculating on crypto for the time that they're worried about finding a job. If they don't have the money to buy risk assets, look, the consumer will spend until they just simply can't anymore, right? So I think that's the risk, right? I think that's the risk. And so, that is something that up until this point, the Fed has had it very easy, right? I mean, higher for longer, right? Higher for longer. Unemployment rate's still low. But I think what could really put the Fed in a tough position, you notice every time we get another inflation print at 3%, the market sells off a little bit, and then it recovers, right? It recovers, but it sells off a little bit. And it's because I think people are getting tired of waiting for a looser monetary policy, and some people take profits and are like, well, maybe this is it. And then we give it another couple of days and we go back up, right? But I think eventually we might reach a point where like unemployment is starting to really move up and hitting 4%, while at the same time, inflation isn't durably moving down to their target. And if we get into a situation like that, where inflation is still sticky, but the unemployment rate is starting to move up, that could be when the market, throws in the towel and says, all right, rate cuts aren't happening and it's time to give up. But as rate cuts get priced out, that could ultimately cause them to get priced in, repriced back in as risk assets then finally have a larger drop. Again, this could take months to play out. It could take another year to play out. I don't know. When we look at these charts of the unemployment rate, it looks like it all happens at once, but like this process over here took I mean, like from here, from breaking this line, the 24-month SMA, in the summer of 2007, right? It didn't really start aggressively moving higher until almost a year later, right? We broke through this in August of 2023, right? So we have to be aware that it could still be around these levels for months to come and it not necessarily invalidate that it could then eventually go up. So those are the things to consider, I guess, right? A lot of different things to think about. But I think it's the macro risk, right? I mean, I think it's the macro risk. And, if you look at like, if you look at like job openings per unemployed worker, we're still above one, right? And there's still more job openings for every unemployed worker. But, a year ago or back in March 2022, we had 2 job openings per unemployed worker. Now it's 1.44, right? So it's come down a lot, right? It's come down quite a bit in over the last couple of years. And the question is, well, if it does continue to go down. And I think a lot of it is just there's been a lot of excess, right? There's been a lot of excess that the Fed has had to get rid of. Look at job openings, though. I mean, they're going down, not monotonically, but they are so slowly going down. I think really what's happening is it's harder to get a new job than a lot of companies are trying to hold on to their workers. But if you look at like new hires are down a lot. I mean, new hires are actually below their pre-pandemic high. So I think it's harder for people to get new jobs, but there still haven't been, excessive layoffs compared to sort of like what we've historically seen. And that's pretty much obvious with things like initial claims. Initial claims are still really low, suggesting that people are not laying off as much as maybe it seems. But where the concerning data is in continued claims, right? If you look at like continued claims, you can see that it's moving up, right? It's slowly moving up. What it suggests is while people are not getting laid off any more frequently than they really have been for a long time, they're having a harder time finding a new job because companies just are not hiring as much. If you were to look at like the number of states where the unemployment rate is rising over 6 months ago, right? I mean, 39 states have a higher unemployment rate today than they did 6 months ago, right? You can also see that we had a local top over here in October 2022, and then it went back down. So I think this is another metric to look at. Will this continue to go up or does it cool back off? I don't know. We'll keep it in mind. But again, the risk is not an ETH risk. It's just more of a macro risk. And that doesn't mean that it has to happen this month. It doesn't have to happen next month. Maybe it doesn't happen until June or July or April or May. I don't know. Again, it's dangerous to get in front of a moving train like this, right? I mean, the momentum is carrying it higher, and last cycle we saw is basically just a 10x move of this cycle. And back then it went to 300. It actually wicked all the way up to 36 or to 360 or so. So keep that in mind, right? If ETH/USD keeps going up as Bitcoin does, but Bitcoin takes over and ETH Bitcoin breaks down, then I would be concerned about a repeat of this. If ETH/USD keeps pace with Bitcoin and ETH Bitcoin does not break down, then truly it's different. And this the analysis is therefore rendered invalid, I think. But that's my view on ETH, and it's still in line with what we've previously talked about in terms of ETH Bitcoin breaking down eventually and ETH/USD going up long enough as Bitcoin does, and Bitcoin USD staying risk on until the 0.5 fib retracement of it, which would correspond to 56%. It would be quite interesting if like Bitcoin dominance hits, goes to these higher levels right around the same time that unemployment rate hits 4%, which is right around the time that the Fed pivots, right? I mean, it seems like it could be lining up, but sometimes when things seem like they're lining up so, eloquently, it ends up something else completely happens, right? And then, if it seems obvious, usually it's because, or usually it's something else ends up happening. But yeah, I mean, I think that's what we're looking at here with ETH, and we will of course see if it continues to play out like the last cycle, and if not, and if you don't believe in the whole monetary policy view of it because you're not concerned about alt Bitcoin valuations or anything like that, then you can still look at these charts and follow along with where ETH is. We even have like a crypto asset filter, and you can actually just click on Ethereum, and then every single chart that shows up on here or most of them will just sort of then go to ETH, right? Like then you can look at like ETH dominance, right? And you can even look at say like, you know, ETH dominance excluding stablecoins if you want, right? And you can look at all sorts of things with ETH. Running ROI of ETH USD. You could even look at, dare I say, the running ROI of ETH Bitcoin if you want to. And see that it's been below 1 for quite a long period of time. Look at monthly returns of ETH. ETH USD has been green for a long time. But guess what? ETH Bitcoin has been red for a long time. You could look at historical monthly average return on investment. This is for Bitcoin. Let me switch this over to ETH, right? All sorts of charts we have for Ethereum. So, you know, the sort of the great thing about it is like I want to be here to discuss the risks and you know the potential upside as well, so that people can make decisions. And again, I mean, it's not financial advice. I'm just trying to provide my opinion, but I hope that it provides some useful insight for you to take what I'm saying and maybe listen to 10 other people that are probably more correct than me and see what they're saying, and then weigh that, you know, and think about those potential outcomes. You know, one of the most fascinating charts for Ethereum is this chart right here. No, not this chart. This one. The number of days since ETH has dropped 30% is now at 466. It's a long time. It's a long time. No wonder people think it'll never drop. I mean, it's been 466 days since it dropped 30%, right? How long has it been since it dropped 50%? 610 days since it dropped 50%. It's insane, right? Is it the new normal, or is it, you know, is it just sort of going with this trend of higher highs on this, and then eventually it still breaks down 50%? Note that it got a 50% drop, you know, once QT ended in 2019. It got that 50% drop. But I think it's a fascinating chart to look at. We also have the short-term bubble risk for ETH. Looks pretty similar to Bitcoin. We also have the price drawdown from the all-time high. You can look at that. We got even like on-chain stuff for ETH, believe it or not. I know I talk mostly about Bitcoin, but like we have all, I mean, a lot of these charts are for ETH as well, and also for a lot of other altcoins. So, you know, a lot of people want me to talk about like altcoins more, but we have a website here, by the way, which again, I mean, I sort of just mentioned it at the beginning of my videos. We have this entire website with thousands of charts on all these different cryptocurrencies, right? I mean, look at the list, right? The list just goes on and on and on and on. You can click on a cryptocurrency, and then all the charts that we have for it will then pop up. You can ignore my opinion on it. I mean, I don't really have a strong opinion on a lot of these altcoins. I think most of them are bleeding back to Bitcoin, but some of them are not, and some of them are outperforming. If there's one that you like that's outperforming Bitcoin, you could go click on that altcoin and then go see what the charts are looking like. By the way, equities, same thing for equities, right? You can go click on Apple and see, you know, what is Apple doing? What is the trailing PE ratio for all these different stocks, right? I mean, this is the S&P. But you could click on anything, right? I mean, you could go to any of these assets and figure out, like, you know, what is it? There's just so many different things that you can look at. Of course, we also have the macro stuff as well. Anyways, we've gone on far too long. ETH 2,800, basically the same price. I think maybe it's about $7 higher or so than when we started the video. But we'll continue to follow along, and again, I'm not going to make an update on ETH in a week or something. It's probably going to be another, you know, month or two before I make another video, because there's just not a lot that happens, right? I mean, it just keeps slowly grinding higher, and it's going to take, you know, for the monetary policy analysis idea to play out, it would take ETH Bitcoin breaking down to do that. And you know, I said back in January the minute it didn't break down here, we didn't get a weekly close below it, and we started to get a pump. I said back then that with this pump, early on in the pump, I said that it's likely not going to break down now in January, and it's likely a good chance it doesn't break down in February either. Because normally what happens with ETH, Bitcoin, is you get basically the elevator up and then the stairs down, right? You do these like insane moves up, and then it slowly comes back down. Same thing over here, right? After you tested the lows, we then moved up, and then it just slowly bled back down, right? Same thing, right? You tested the lows, goes up, and then it slowly comes back down. It could still take weeks for it to get back down to those prior lows. I do think it will eventually go back down to the prior lows at 0.049. But again, good chance at the earliest it doesn't happen until March, which, I mean, at this point, it's only like 10 days away. At least in terms of durably going below it. It could go back to those levels before March, but I don't think it'll get durable weekly closes below. I mean, it can't really get multiple weekly closes below it between now and the end of February, just because there's not really enough time left. So, but yeah, I think that, maybe as the year goes on, and as rate cuts still haven't arrived, we might start to see ETH Bitcoin finally break down and people throwing the towel on it as Bitcoin sort of grabs that liquidity. And it seems like it could be coming with perfect timing. Rate cuts in a few months, Bitcoin halving in a few months, maybe ETH Bitcoin bottoms in a few months. Maybe it all happens at around the same time. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. You can, of course, get access to the website over here that we were just talking about, as well as a lot more things. So make sure you guys check that out. There also is a free tier that will get you access to the weekly newsletter and a few charts that you can follow along. Some of the charts, by the way, that you get for free are the DCA strategy tool, right? So you can get the DCA strategy tool. There's some other ones as well. Anyways, we'll wrap it up there. Thank you guys for tuning in. Give the video a thumbs up, subscribe, and I'll see you guys next time. Bye.